Howdy folks, welcome to the Daily Coin. My name is Rory and today is Wednesday, March the 21st, 2018. And I have the very distinct honor and great pleasure of welcoming to the show for the first time a new guest. He's very bright. You've read his work, you know him, but you don't know him. And I'd like to introduce Mr. Chris Marcus, and you can find his work over at ArcadiaEconomics.com. And you probably are more familiar with his work being at MilesFranklin.com. Chris, welcome to the Daily Coin.
Hey there, Rory. Thank you so much for having me. It's great to be on your show and excited to talk about the markets today.
Well, we've got a lot to talk about, so we're just going to jump in. Let me ask you this, Chris. Where would we be with gold and silver as honest money had all of the attention that cryptocurrencies and blockchain technology had, that same excitement, had that same noise been made for honest money, gold and silver for the past year? Where would we be today had that same thing come about with gold and silver?
It's coming.
Where would we be today?
I think that at some point we're going to see the gold and silver have price action very similar to what we saw in the cryptos last year. It's, to me, is a matter of, like you mentioned before, that threshold. Because the guys who get gold and silver, we don't need more reasons. You know, maybe if someone wants to send us a big check and we can buy more, that'd be great. But it's really, you know, just get a portion of any of these guys that are sitting in. I mean, there's people still out there buying bond funds. One of the shops that I worked for, I remember this nice guy who had a little fixed income desk as well. And, you know, I was friends with this guy and, you know, he was a smart guy and all, but I noticed this was maybe 2011 or so, you know, as he's looking at the different bonds, he's looking at the Moody's rating. I'm like, wait, you actually, like, take the Moody's rating? I say this because my first job out of school was working for Moody's. And, you know, obviously, I mean, what more do you need? They have government debt, AAA, essentially making the statement that it's simply not possible. There's no possible way to have a better credit profile than the U.S. government according to our rating system. And then here's, you know, a guy that, you know, I'm sure he was a smart guy and, you know, I'm sure they were trading some big, decent size there. So again, you have 98% of the world that's still, and I would imagine at some point, let's say Powell comes out tomorrow and says, let's raise, you know what, we got it under control. We're going to raise it 200 basis points. We're just going to sell off the entire balance sheet. You know.
Who's buying?
It's right. So, you know, it's like, the thing is, on borrowed time, it's coming. And yeah, when you get a little more of the rest of that world that's like, wait a second, there's a problem here. This isn't sustainable. Maybe I shouldn't be in this bond fund, especially with silver being so small. You don't need a ton of those people. You only need a few of them to say, all right, I want some metal. I want to hold it here. You can only push that beach ball underwater for so long. So I guess a long-winded way of saying, yeah, I still, I mean, I sit there and write about it. I sit here and have the silver because if there's some way that silver isn't going to be trading a lot higher with when you resolve all the short paper that's out there, then I can't figure out what it is.
Well, I can't either.
Unless Krugman's right and I just need to drink more fluoride, and that's where I've got a skew in life. I don't.
Well, don't listen to Krugman.
Yeah.
And please step away from the fluoride. I wanted to ask you, Chris, you had written an article a couple of weeks back over on your website at arcadiaeconomics.com, and
Mm-hmm.
you had found an interview where Chairman Jeb Hensarling was talking to the Fed chairman, the new Fed chairman, Jerome Powell. And Hensarling asked him a question about reducing the balance sheet and describing the new normal. And the new normal, wow, their definition of new normal and mine.
Had you heard about this
I
before?
had not heard about this, but he had, Hensarling had
Uh-huh.
asked him, he said, with respect to normalization, this is Hensarling to Jerome Powell.
Right.
With respect to normalization, I think you had said publicly that you expect the new normal with respect to the size of the balance sheet to be roughly $2.5 to $3 trillion and get there over 3 or 4 years. Do I understand that correctly, Mr. Chairman? And Fed Chairman Powell responds, yes. Now, I don't know what normal is. I don't know what new normal is, but I know that old normal, zero would be balanced. But
Okay.
apparently, 2.5 to 3 trillion out of the 4 trillion is now the new normal of balanced. What say
And
you?
and we're apparently going to get there sometime around when the Germans get their gold back. So that I mean, I was so stunned when I first heard him say it. I had to rewind it a couple of times because I'm like, but no, he couldn't have just said that. And especially tacking on in 3 to 4 years. So basically saying that there's a good chance that doesn't even happen. Because think about what's going to happen in the 3 to 4 years between now and then.
Right.
But first, to that whole point of the new normal is 2.5 to 3 trillion. And when, like you mentioned, the way the question was phrased, that he had said it somewhere before, and I was thinking, well, that's certainly news to me. I asked around. Dave Kranzler is actually out here in Denver too, so
Yes.
I talked to Dave a bit, and I was wondering maybe if I had missed something or had this been priced in years ago and I wasn't aware. But regardless of whether he said it before or not, I mean, you could really make the argument that they just tacked on $2 trillion stealth QE package. Because if you go back to a week before Lehman Brothers collapses, 2008, balance sheet was about, I think it was 880 trillion, somewhere closer to 900, not trillion, billion.
Thank
It's
you.
closer to 900 billion, slightly under a trillion, and
Yes.
then Lehman goes, you have QE 1, 2, 3, whatever, however they count it, that we're up to now. So, at least from my understanding, these programs were always sold as temporary, as a temporary stimulus. You have 8 million quotes, and you can see Bernanke on 60 Minutes, which that was a hoot, by the way. It being temporary and worth checking out, by the way. You'd have a blast. Maybe another day we'll talk about that one. Then his op-ed in the Washington Times right before QE2 saying again, these were all temporary measures. So you would think the new normal would be that, or that normal would be going back to where you were before you started. Yet somehow, and again, well, I mean, if we say 2.5 to 3 trillion, can we just assume that means 3 trillion
Right.
at best case? I mean, I'm sure I find it hard to imagine hitting the lower part of that range. And I was just stunned that you didn't hear it. Kranzler hasn't heard it. I haven't really heard it mentioned. Dave Jandis said he saw a Zero Hedge article, but aside from that, nobody else in the it wasn't in any of the coverage of the Fed statements or any of the CNBC or Wall Street Journal articles. So I'm was stunned when I heard it, because I mean, what do you think are the chances we actually get anywhere near 3 trillion, given what's happened now when the 10-year is nearing 10% and the markets are melting down? Do you see any? Do you see it being possible that we even get there?
Maybe in our, sometime in the very, very distant future, we could get there. I mean, look at the pace of them raising interest rates.
Mm-hmm.
Normal interest rates used to be somewhere 4.5%, 5%. Now they talk about, now they make a big deal about adding 0.25 percentage point. I don't even know how to describe it. I mean, they just make such a huge deal out of it that it's so far removed from reality, Chris, that I don't know what to think about it.
How many years have you been hearing the tapering talk? It feels like almost, because there were a couple of years of speculation. They're getting ready to taper. They're going to taper soon. And then it really hasn't even been every meeting. We're still at, was a 1.25 to 1.5 that we're at today. Remember, this is 10 years ago.
Right. And it's taken them 10 years.
Years ago. And exactly, you're seeing now what the Austrian school has been talking about all this time, and when I said that, I don't even think that we'll get to that 3 trillion level, because we've started and according to the Fed's data, I actually have looked at their reserves. Apparently, it looks like it has come down slightly. So, let's say, sure, that they've started unwinding a little bit. Again, you have rates just nearing 3%. It's not like rates are at 10 or 11%, and we're finally running into a little trouble.
Right.
If this is what happens when rates are at 3%, that's why I'm particularly interested in, more so than usual, about what happens at this Fed meeting, because, geez, if Powell ever signifies or gives the market the impression that they're going to go even faster than expected, I mean, it's like, what do you expect is going to happen?
I mean, do you expect them to raise rates, the Fed funds rates? Do you expect them to raise that again this time? I mean, there seems to be a lot of people that believe that they're going to, and once again, they're making a huge deal out of 0.25 percentage point. You would think that they're raising it, like you said a minute ago, 200 basis points. No, it's 25.
Yeah. I mean, so there's, that's a great question, because on one hand, the whole thing is incredibly silly that the entire world is sitting around this organization that's credibility is suspect at best.
On a good day, yes.
And anyone who wants to argue whether there's market manipulation, I mean, we're talking about a group that openly manipulates the bond market, but just calls it policy, so people think that's normal.
Right.
Yet,
right.
Okay, let's play the game here and say, all right, at least to the degree that we're in this world, and if you want some eggs, the guy wants the green stuff more than your silver. So how do we incorporate, all the different things that are out there, the manipulation that might be present, and still make the best of that? So along those lines, my guess is that they will raise 0.25 point tomorrow. Actually, it was interesting. I came across an article that if you back out the Fed funds pricing, they were suggesting that it's actually pricing in an 11% chance of a 50 basis point hike, which I thought was interesting. I would say it's maybe slightly, I'd see it as slightly south of 11%, although when you look at what Powell has said in the last month or so, Certainly, is it a non-zero probability? Maybe it is, because again, last time Powell was in front of a camera, he started talking and the bond market spiked because he's saying, we're going to keep going ahead. I think a lot of the market almost doesn't take it seriously that the Fed is actually going to raise rates, but then now they're seeing the stock market get hammered every time rates go up. And certainly, again, my guess is it'll be a quarter point, but perhaps even more so than usual. I think you're going to see people sifting through these statements for any language that they can, because it's almost like, is this guy really going to go ahead with it? Because if he does, we've seen the exact effects that you would expect. I mean, it's like if the market is everything's gonna be roses and puppies when you print the money, what happens when you take it away?
They're not going to take it away. They can't, because if they
Right.
do, then what's going to happen to the bubbles that are out here, and what's going to happen with the corporate stock buybacks? If these companies stop getting the free money from the Fed, then the bubbles go pop. That can't happen right now. Or am I wrong?
You're 100% right, which is why it's so fascinating that you almost wondered, weren't you wondering last, about, let's say, late January, early February, when the stock market went down, were you also wondering, oh, is this the point where maybe they start reversing course or say we're going to slow down on the hikes? Because I think you and I and most of the folks in the precious metal community were just assuming at some point they will come in. It's almost like, how long will they allow it? How much will they allow the crash to occur before they step in with the shock and awe campaign, right?
Yeah, I don't think there's going to be any shock and awe. I think that if anything happens, that they're going to slow walk the stock market down. They're going to slow walk some of these other bubbles, if possible. They're going to slow walk them down, like the student debt bubble. That's just going to blow. The
Right.
the auto loans, the subprime auto loans. That's just going to blow.
Right. Right.
And there's nothing they can do about it. About the new housing market, that bubble. Can they slow walk that down? I don't know. The only thing that
That's
I see that they can is the stock market. And if they do that, then what have they got? They got nothing. They got nothing. Or once again, am I seeing this through, funny eyes or funny math?
I think you're seeing it exactly as it is, which is why, man, if there's a way that you can still patch it up back again like you did in 2008, I think you're right that they would like to slow walk it. But it's like any of those schemes, once there's too many balls in the air, excuse me, and you can't continue juggling them anymore. And that's the point that I feel we're at, where I'll bet they'd love to unwind some of these things slowly. I
Sure.
just don't know. There's the things that the government wants to pass, although I still believe there's something to nature where, nature is always bigger than any individual group. And at some point, things stop working. If not for any other reason, the fact that more and more people become aware of what's going on. And again, that's why I've really appreciated your show. I listen to a lot of your guests while I'm doing research, and the fact that there are guys like you out there that are spreading what's actually going on. We were talking a little bit earlier before we started about how, what's the threshold of people that are really looking at this perspective, where I would argue that, it's not a matter of giving more reasons to the people who own gold and silver why it's good. It's more finding ways to let, if you had even a small amount of the rest of the world actually grasp this corner that the Fed has backed itself into, and could see why it's so difficult to see any slow unwind. That's my guess of what changes it, because really ever since I started getting into the precious metals, I saw two basic paths where either the Fed continues printing and blows out the dollar, or if they stop printing and really unwind the balance sheet, then it's going to come crashing down. And for the same exact reasons that the housing bubble couldn't go on forever. So I think they'd love a slow unwind. I just don't know that that's still an option that I don't think they can successfully drive that car anymore.
What do you think about, what impact do you think the Petro-Yuan contract that's coming up in just a few days? I'm not saying that there's going to be a light switch on March 26th, but the reality of it is that that's going to have an impact. It is, and over time, from my perspective, it's going to have a real impact. And how do you see that this new contract coming on for this new oil futures contract coming online on March 26th, priced in yuan? How do you see that impacting this conversation that we're having right now?
Well, I like the way you phrased it, because I think that when you have events like this, Iran banning use of the dollar, China and Russia buying gold, they are all important factors. Although, like you point out, sometimes it doesn't. The world doesn't change the day that it's launched. So, but when you think about, certainly, should that be successful, and whether, who knows, maybe that exact model as we see it isn't successful but leads to something else, or maybe it is still. I mean, that's a big, even if it were just symbolic, that you see. We're not talking about like some hicks out on like a small 1 mile island. This is if the Fed isn't going to buy the bonds and China's not going to buy the bonds, this is a little bit of someone important in the game here.
Yes.
And I remember when I first was still back on the New York Stock Exchange, freaking people out because they weren't too interested in gold and silver over there. And I remember thinking, what could be the spark that would actually change this? And let's say this is back in 2010, 2011, where, a lot of these things haven't developed. But I remember wondering at times, maybe whether it was a war, or perhaps if something happened with the status of the petrodollar. Certainly there's that school of thought, which I wouldn't claim to be an expert who could confirm one way or another, although to the degree that in the trading community, I know there are some folks that believe quite strongly that Saddam Hussein and Gaddafi was not, well, I'm sure it was about their oil too,
yes,
but more so about the fact that they were saying, all right, we're going to trade outside the dollar.
Right.
So now you have China saying it. And here's the thing, and I'd love to get your opinion on this, because I've wondered for a while, let's say that, whether you call it the government, deep state, or whatever name you want to put on it, whoever makes these decisions, which are baffling from any sort of long-term perspective, let's say they try and go to war against China, is that still something that, again, you could successfully execute and win, given that China has that trump card? All right, we're gonna block off for sale of our treasury holdings.
Right.
It's all financed on paper. So don't you think that gives them a little problem in implementing some of these things, or really being able? It takes away the leverage against China when you think about it.
It removes a lot of the leverage, and not only do they have the financial weapon called $1 trillion plus in treasuries, they also have a very strong alliance with Russia, who has the military capability of saying you can't do that, and they would be, it wouldn't be a problem for Russia to do that. I mean, the diplomacy that both Xi Jinping and Vladimir Putin have shown has been remarkable. It's been, at
Mm-hmm.
times, it's been breathtaking to see the diplomacy that they have brought to the table in light of everything that they have had to deal with. And as far as pulling the financial plug, while that's a great way of, for you and I to get all excited, for the audience to get excited and go, yeah, they can just stick it to the man. Well, they can't. They can't just pull the plug and say, well, we're just going to dump all this on the market, because it would blow everything apart, including themselves.
Right.
And I don't see Xi Jinping or Vladimir Putin as being completely demented like the lunatics that we have in Washington, D.C., the City of London, and Wall Street. I don't see, and the Federal Reserve, I don't see them being that as quite as demented as those folks. Not saying that they're stable.
That's a hard level to reach, though.
That's a certain level of crazy.
That's the PhD status, certainly.
But it doesn't. So I don't really think that would be an option. I think that they could use that in their diplomacy. I think that they could, say, yeah, well, Mr. Trump, what we can do is that either you can get those ships and those tanks and all of that other military equipment out of here, or, I can drop 200 or 300 million in bonds.
Yeah, and which I think you're right. Hopefully that it doesn't come to that, although it's just interesting to me when I see the antagonization of China, which it seems to me a strange thing to do to your biggest predator, just that right. They do have that leverage if, pushed into a corner.
Yep.
Which, again, back to your original question of the Petro Yuan, I mean, certainly when you look at the actions, certainly that the handwriting is on the wall that one way or another they're getting sick of the reign of King Dollar.
And they're done with that. They're done. That's why they've put in. That's why AIB is in place. That's why the BRICS Development Bank, the New Development Bank, all these banking institutes and systems, the SIP system in China, the Russian alternative to the SWIFT system, all of that and they're both linked together. I mean, these are systems that they can literally flip a switch and go, we don't have to do business with you guys ever again.
Mm-hmm. Yeah, when you add all these things up, and I'm guessing you're familiar with that story that was going around about 2 months ago, where there was speculation that China was considering cutting back or scaling back on its treasury purchases. Think about how all these fit together. Where here was the quote from the article: the officials recommended that the nation closely watch factors such as outlook for the supply of U.S. debt, which I might add is growing faster than ever, along with political developments, including trade disputes between the two biggest economies. And that was what they were going to, allegedly, let's call it, base their decision to cut the treasury holdings. So the supply, well, that's certainly not looking good. In fact, have you seen any of these articles lately where now that we've passed 20 trillion in debt, everyone's talking about 30 trillion, yes. The projections of...
Yeah, so, just a mere 50% increase from here. No big deal.
If Bush doubled it and then Obama doubled it again, you got to aim for some big numbers here.
Yeah. Well, it has to double.
It's like, and it's amazing. Have you noticed how there's never, I haven't caught anyone, maybe the rare exception of Rand Paul, but even there's not even a discussion of how to cut anything yet. Have you
Right.
noticed that?
No, there's no talk of cut. Are you some kind of maniac? Oh, you're one of those kind, one of those libertarian types that believes in stability and balanced, ledger sheets.
It's
What's the
called a
matter with
balance
you?
sheet. It's
Oh, it's called a balance sheet. Oh,
So I mean, it's like when you think about what China's doing. I mean, why would they want to buy more treasuries? Here,
right.
if that article, if that quote was anywhere near what's being discussed in there, which at least you think it should be, you're just looking at politics aside, the outlook for U.S. government debt. I mean, it is what it is. And then, the other one was the political tensions, which here it is. It seems like hardly a week goes by where they're not labeling China as an aggressor or currency manipulator. So if this is going to happen, you see that, and I think it's going to be interesting to see how the Petro Yuan develops. Certainly, should that pick up some steam, you really have a situation where a lot of demand for dollars and treasuries is exiting at the same time that while I still think the Fed will continue printing, it's interesting that at least for now, I mean, I don't think Powell's going to come out tomorrow and cut rates. And if they're also unwinding the balance sheet, then at least as far as I can see, either the stock market, real estate market are going to get pummeled outside of a lot more money printing, because if China's not buying the bonds and the Fed's not buying the bonds, who's going to buy the bonds?
Right. There's nobody left.
So that's the corner that, if you really simplify things down, maybe it's taken a decade for it all to develop, but you have what I would consider a rather interesting Fed meeting, because now that we've finally seen rates go up, we've actually seen a pretty significant reaction to the other markets as rates have gone up. You're perhaps getting farther down the timeline, because nothing has changed except the amounts have gotten bigger. And I would argue that your average person out there that, is in bond and stock funds, I don't think there's a lot of people that are really aware of the simplicity of this corner. But you saw how quickly that changed in January and February. So I'm curious to see how it plays out. It's like you can guess the ending, but how do we get there? I think we'll find out a lot more tomorrow.
I'm hoping that what's happened over the course of the past year with the advent, with all the noise that's been made about cryptocurrencies and blockchain technology, my hope has been that there's been a lot more interest in how currency works and what is currency and what is money and how these what role they actually play in my life. And I'm really hoping that there's been a lot more of that type of questioning amongst the masses, because that's really what it comes down to. And if people are getting, I hope that there's a significant number of people that haven't just gotten into the cryptocurrencies as some type of a new investment vehicle, which I know that most of them have, because most of them don't even know what it is or how it works or anything about it.
There's some of that too.
but there seems to be a lot more education going on at this point within the individuals regarding currency because of cryptocurrencies. That's what it seems like. I mean, I may be wrong, and I'm really hoping that that's going to bleed into the gold and silver areas, or into gold and silver as money, because that's what we need. It's interesting that Russia, as soon as they got within a gold bar's distance of passing China on the uh, global gold reserves list, that they invited the news agency in to photograph it and to present their what appeared to be their central bank's gold holdings. And in
Mm-hmm.
doing so, they presented their silver
Did they bring
holdings.
Steve Mnuchin along for that one?
You know,
Maybe you could make a little home movie.
yeah, a little home movie outside the vault and say, yeah, it's fine. Gold's fine. It's all good. It looks good. I opened the
Yep,
door,
yep.
looked inside. It's all there. It's all
Seems
there.
like it. I
Yeah.
ballparked it.
Yeah, I ballparked it. I saw one gold bar. Yeah, it's there. Gold is fine. Yes, gold is
Have,
fine.
have you ever actually been down to Fort Knox?
No.
I actually drove past there. I was driving back from New Jersey to Denver and figured I'd swing by there. It's actually pretty bizarre, or I found it pretty bizarre. I don't know perhaps what I was expecting, but it's not like the Fed where you can go and take a tour or something.
No.
I mean, it's on this curved part of a highway that you can't really stop. But I remember as I was driving past it and I was looking at it, again, it's not any big scoop or anything, but it just seemed bizarre because it looked like there was nobody there. It looked there was a couple cars outside, but there were no guards or anything. And I don't know, maybe there's gold in there, and I'm
No
just
guards that you
reading.
could see. There's
Just
plenty of guards, and they have the understanding that I have is that they have some of the uh, super high tech security measures. The ground vibration or ground sense. So if you're walking across it, that the vibration is picked up, and there's
oh yeah,
2 or 3 layers of fences, all kinds of cameras, all types of just like I said, the super high tech security systems, and people with guns, big
yeah.
guns. They're there just because you didn't see them.
I was wondering. It was odd, and who knows? Maybe that's what. So they actually have looked inside the Russian reserves. It sounds like.
Yeah, there was a huge article. It made rounds a couple months ago. I wrote about it. There was a lot of people that did created videos and different articles, but there was a whole series of photographs from within this vault that showed detail. That this here's part of the security of how we conduct audits. Here's the system that we use, and here's an overview of the entire vault. Here's us measuring it. Here's us weighing it out. Here's the scales. Here's an individual bar. Here's a whole stack. And what was the most fascinating part was the fact that, I mean, seeing all the gold, of course, gets me excited because I love gold,
Right.
and
Right.
seeing that much money in one place.
Russian vault looked kind of like your basement, Rory.
I wish.
Yeah.
I'd just like to have one bar. That's I'm not
Yeah.
greedy. Just give me one. But what to me the real story was the fact that they had all of this silver, and they just had bar after bar after bar after bar of silver stacked on top of all the gold, and there were just row after row after row of these double stacked, what appear to be 1,000-ounce bars of silver. I mean, and it was just like, okay, there's no mention of this anywhere, and they don't have to report it to anybody, so there's no record of how much is there. But I wrote about it, and I was calculating the number of bars and using 1,000 ounces times each bar, and it's just like it's incredible. It is.
And that's another factor when you just think of how all these things are coming together, which certainly for the gold and silver crowd, I mean, it's really more of a mental challenge at this point because, yeah, you have all these reasons, and then you've watched the price get smoked over the last 7 or 8 years. Yet you look at the places that the U.S. is borrowing from, and what are they doing? They're creating petro yuans and stacking gold and silver. So
That's all
you
you
can,
need to know.
yeah, and it's maybe that's part of the way our culture has gravitated towards a short-term trading mentality where every once in a while you hear someone say, oh, well, if it hasn't happened yet, that means it won't happen, which be careful about that school of thought, because it's the example I love to always point out that I think people find helpful is thinking about, back to the mortgage bubble. Because if you said there was a mortgage bubble in 2005 and maybe put that trade on, you weren't wrong, but you were a little bit early. Similarly, with gold and silver getting pummeled in the beginning of the crisis, before eventually going on to 1900 for gold and $49 for silver. And perhaps that's something that I think would be worth pointing out for people to be aware of, that we could have another crash or more quantitative easing and see markets go in ways that are completely counterintuitive. I've wondered if you could see these markets collapsing and yet still read the articles about how investors are flocking to the safe haven dollar and treasury even while they're collapsing, which on one hand makes no sense, yet at the same time, I think it's helpful to remember that there is, even the manipulation that we're aware of, when you think of what else is going on, distorting things that we're not aware of, is always a factor that I put into any financial equation these days. And then just realizing that not everyone is this idea that the efficient market hypothesis, that everyone is pricing everything in perfectly correctly at the same time. You can just compare what we're talking about here and then read some Paul Krugman, and you'll see that there are two widely different takes on what's going on, and people can decide for themselves which one makes more sense. But I mean, certainly the handwriting is on the wall. It's not hard to see how these things get resolved when you look at them logically. But yeah, there's a lot of emotional conditioning. Banks telling you one thing when they're profiting off of the other half of that. So it's a challenging time, especially for the gold and silver crowd. Yet, to the degree that trading is a science of saying we're at point X, what is likely to happen from here, not what happened a month ago, certainly all the pieces look in place. And I'm curious, do you have any thoughts on whether 2018 is the year? Or you're thinking it's still a bit ways off from here?
The year for what?
Perhaps a revaluation of gold and silver to somewhat, at least somewhere near the highs of 2011. What's your guess on when we see something like that?
No, I don't see 2018 as being the year for new, either nominal or whatever highs. I don't see that. Maybe in the early 20s, 21, 22, 2021, 2022. Silver, same thing. I think that what we're going to see over the course of over the remainder of 2018 and into the early 2020s is gold and silver both making significant gains
Right.
that begin to capture people's attention, but not getting into that into those lofty numbers like the 1900s, the 1800, for gold, 1900 for gold, or,
Right.
30, 40, 50 or more for silver is I'm not saying that silver is gonna get into the 50 plus, but it wouldn't surprise me
Yeah.
at all. And I think that both precious metals are going to move in that direction, beginning 2 years ago, because silver hit its low in 2015, December 2015, and it's
Right.
gained ever since. Gold, same thing. It's been gaining ever since. It's going to do that again this year, next year, year after, the year after that, and they're going to keep moving. And I think that what we're going to see, probably maybe this year, we may see a huge spike in gold and silver, huge spike north, for both. But I think that we're going to start seeing more of that in 2019 and certainly 2020.
Mm-hmm.
And I mean, or would you agree, or do you think that I'm just living in some kind of fantasy land?
Well, I think the timing is the tricky part.
Well, yes.
And I mean, I'm stunned that we have sub $20 silver as we sit here in March of 2018.
Yeah.
I'm in the camp that I think the short version is you have a lot of short paper written, and basically you can write as much short paper as you want. So if you have that ability, you can keep the price of an asset distorted. What I see as the resolution of that is eventually, if you have someone show up and say, I want my physical delivery, and it's not there, then you have, you could essentially force the short squeeze, which I feel it's almost been so delayed, and as it's like putting that beach ball underwater, the farther you stick it, then similar to what we were saying with the Fed, maybe wanting to do a soft unwind, but eventually it becomes a little bit harder to do so. So I've tended to think that there would be somewhat of a break point, whether that's 2018 or later than that. But I think once it starts to move, we'll see conditions perhaps like 2011. There's certainly the possibility that you could see something even more extreme than that. But in terms of investing in silver in particular, what I like about it is that, especially if you structure your trading so you have the time on your side, because there's all of us reading and trying to guess when it's going to happen. But to this point, I don't know that perhaps anyone outside of maybe some of the folks at the banks actually know the answer to that. But if you think of silver as, all right, I want to save money in the bank, and here's something that I won't need, or I want to pass on to my children, or 5 or 10 years from now, if I want to retire, there's just so much going in favor. You factor in all the things with the Fed and the position they're in, where one way or another you have problems with this dollar system. And then not even to mention that the metals are basically trading around what it costs to get them out of the ground.
Right.
So there's a bit of a floor there. I mean, if, maybe you can push the silver paper price to $10, but, you're not going to have a lot of people spending 15 or 16 bucks to go get it out of the ground, right?
Right.
And then if you notice how basically every other asset class is at least doubled or tripled since the quantitative easing began, yet here the ones that would seemingly be the most sensitive to increased money and increased credit as in gold and silver have basically stayed where they were. So I think things are set up that what you saw with the cryptos, that whenever you have the environment where it's a more freely trading gold and silver market, I do think you're going to see some stunning numbers that will be reminiscent of that one thing I find interesting with the cryptos and looking at that chart, which certainly is stunning in many ways, and also if you looked at maybe a 2011 chart of gold and silver, I know a lot of people are saying, well, is this a bubble? Why are things moving so quick? Yet, ironically, it actually matches the chart of the U.S. debt or the chart of the money supply or the Federal Reserve's balance sheet, which have all gone exponential in this past decade. So to imagine that gold and silver are doing what we saw last year out of the cryptos is personally what I expect. And again, all these things that we discussed today, yuan, gold and silver in Russia and China. It's challenging because sometimes things take the schedule they do to develop, but it sure seems like you can see the path we're headed down. And at least I have yet to hear any central banker, any congressman or U.S. politician. I mean, if there's a plan to, sort that all out, I'd sure love to know what it is. Can you get them on the show and they can tell us?
I'd love to, but
maybe it's because I got an MBA and I'm incapable of figuring things out now. But I mean, if there's a way it works, I don't know what it is. So,
just real quick, Chris, do you think that the central banks are going to be able, whether, you got the Federal Reserve, you got the European Central Bank, and the Bank of Japan. These three entities have produced an unbelievable volume of currency. Just mind-boggling. It's the brain human brains can't even wrap around the numbers that these have created individually, much less collectively. And these three central banks impact the entire world. They really impact the Western world's economies, but in an offhand way, they impact the rest of the world as well. Right. How do they get out? Can they get out, or do they just blow apart and become dust and roll it up to the IMF, World Bank, and Bank for International Settlement?
I think you could see the names change in like one of those off-balance sheet funding deals. You're sliding it in here, sliding it off there, but the junk is still there. The short answer is that, anything I can see, it looks like we long ago passed the point of no return, at least in terms of the current financial system as we know it. Quick point, if I may, about reminds me of that relationship between the U.S., Japan, and European central banks. It's been interesting to note how the dollar index has gotten torched pretty good over the past year.
Yep.
And I believe it's 70% of what the dollar is being measured against is the euro and the Japanese yen. I think it's 57% the euro, another 13% for the yen. So we've seen the dollar get smoked against two other paper currencies that are in the land of negative interest rates. So, I mean, God only knows maybe what we saw in the crypto pricing is how fast anything that can't be printed would increase. And when you think about the way foreign partners are, I mean, Iran actually banning the use of dollars.
Yes.
Certainly, I wonder if maybe is there a hyperinflation going on, but just so many of the markets are distorted that it really can't be seen. And then, of course, you have the Swiss National Bank also buying U.S. stocks. I don't think there is an unwind plan. Similar with, the actual debt loads crossing 20 trillion, and they're talking about 30 trillion. There's not even an effort to pretend like there's a plan. So whether these guys are all reading, Keynes and Krugman columns all day and just believe in Keynesian economics and somehow will raise interest rates and it'll be okay. Or if you take the more nefarious view that a lot of these guys just are probably pretty clear on what's going on and don't care. I'll let for the listener to decide where they fall in that spectrum. But no, I think it's long ago past the point of no return, which doesn't mean that the world has to collapse or that it has to be this situation that I think many have feared. Yet what I think is good about the disclosure that's coming out about the political scandals, again, I'm not an expert Clinton researcher, although it sure seems like there's a lot of evidence of some things they've done that are beyond shocking. So again, I feel that really we're just waiting for the break point of however this next debacle unfolds. I think it is enough. There's enough out there that is exposing some of these forces that perhaps are not really our friend as much as we thought we are, but can lead to more awareness, more people listening to the Daily Coin, understanding why people like us are talking about gold and silver. When you mention the cryptos, I think in the very least, that still raises the awareness of money because it's related. And I think there's a lot of people sitting on crypto profits, maybe not as much this month as opposed to 2 months ago. But I remember hearing a lot of people that get into cryptos, make profit, and then become aware of what's happening in gold and silver and say, all right, this is a good place to diversify because, Bitcoin hits 20,000 bucks again and you're sitting there with a big gain and you say, well, all right, it's been a pretty big move here. What's something that, seems similar yet hasn't similar characteristics yet is still at a very low price, hasn't made the move already.
Right.
I think it's just another thing bringing awareness to the monetary situation, all of which is good for gold and silver. So I would say to folks, hang in there. Best thing about gold and silver that we can do is just structure our lives, our investments in a way that, hey, if you have it stored somewhere safely and you have a way to pay your expenses for the next couple of years, then I think that's really the great position to be in because you can see the factors building. And here's finally a way that you can save and have more as opposed to if you're not as excited by the negative interest rate. Rory, I'm sure that as soon as we're done here, you were probably on your way out to go pick up some treasuries. So if you had $100 this year, you'd make sure that you have a little extra space next year. Am I right?
Yeah. That was my plan. I was going to go out and get some treasuries. That way, I could lose money by this time next year.
Yeah, what a deal.
That's what I'm all about.
Yeah,
investments that I know are going to lose money.
Yeah, we've seen the same pulling the football away, Charlie Brown trick time and time again. And I know it can be challenging for people to get past the conditioning and propaganda, which the more we learn, the more stunning it is, the false information we've been fed. But again, I think the fact that people are listening to this interview and listening to your show, again, I'm really grateful for all that you're doing and all the great guests you bring on here. And take that information. Don't do anything because I say it or Rory says it. But I mean, there's also the facts that you can look at and think about what you see happening. And I've found that when people do that, gold and silver can be a really great way to know that, all right, it's unfortunate what some of the banks and the system has done, but we don't have to sit here living in fear that, all right, if they're going to do this or that, that my life has to be disrupted like it was for so many people a decade ago. And hopefully this was helpful today. So really appreciate you having me on here, and it's fun talking with you.
Well, same here, Chris. And Yeah, we've been speaking with Chris Marcus, and you can find all of Chris's work over at arcadiaeconomics.com. And he also, you can find some of his work over at milesfranklin.com. And Chris, this has been a real pleasure speaking with you. I'm really glad that you and I hooked up, and I hope that we can do this in the not too distant future.
Yeah, thanks so much for having me on here, and also really appreciated your kind emails where I think is not always the easiest quest that we're on, but I really appreciate everything that you're doing and spreading these messages out there. And hopefully this was helpful for people, and I'll look forward to doing it again soon, my friend.
Sounds good.